Good morning, good evening, wherever you are in the world. It is R Trades back here with another video. Want to thank you for joining me. In this video, we're going to discuss 5 rules for responsible day trading, guys. If you like this content, if you'd like to see more content like this, if you'd like to support me in a big way, please make sure to like, comment, and subscribe, guys. My name is R Trades. I'm a licensed attorney here in the state of Texas. Currently doing some criminal defense work. I'm not a full-time day trader. I'm an amateur day trader. Please remember that all of these are my own opinions, and none of this constitutes financial advice. Okay, guys, so please make sure to use those affiliate links in the description box below. With that being said, in this video, I want to cover 5 rules for responsible day trading. Take this from someone who's blown way too many accounts that I even want to admit. Take this from someone who has personally experienced a great deal of pain and suffering from making the wrong decisions. All right, I cannot offer you financial advice. I can only tell you from my personal experience that if you follow these 5 rules, you are much less likely, in my opinion, to bust your account, whether that's a prop account using an Apex Trader funding, Top Step, TradeDay, whatever, or using whatever account that you're using, guys. If you follow these 5 rules, you are much more likely to succeed than if you do not follow these 5 rules. Okay, guys, rule number 1 is very simple, and that is always trade on your computer. Do not trade on your phone. Always trade when you can watch the market on your computer and you can pay it your attention. So, guys, one of the sort of most obvious mistakes, one of the ways that a lot of people, it doesn't even cross your mind, is when you are day trading, you actually have to watch the market. And you actually need to be dialed in and watching what the market is doing. And so if you are trading on your phone, you're almost certainly doing something else. Now, for those of you that are out in the working world and you're working a job and all you can do is trade on your phone, I've got bad news for you. You're probably just not going to have a great time trading because you're distracted, guys. You need to give this your attention. So if you can only get on your computer and trade for 30 minutes in the morning, even if it's during the 30 minutes of the pre-market, that is what you need to do. You need to be on your computer and it needs to have your full attention. You can't be at work. You can't be on your phone. You can't be driving. You can't be sleeping. You need to actually be watching the market as it is fluctuating. Okay, so item number 1, my first rule for responsible day trading is only trade on your desktop or laptop computer. Do not trade on your phone. Do not trade, in other words, distracted. Trade when you can actually pay attention to the market. Otherwise, guys, you can spend time watching the chart. You can spend time sim or fake money trading. You can analyze the market, read the market news. Those are all things that I encourage you to do. But if the market is, again, trade on your computer, trade when you can pay attention. Do not trade distracted. Don't trade on your phone. All right, guys, that is rule number 1 of responsible day trading, which is trade on your computer and trade when you can pay attention. Number 2. Only trade the day session, which is 0930 to 1600 Eastern Standard Time. Now, guys, you might want to extend that out to be about, say, 0830, about an hour before the stock market opens, although the New York stock market open can bring a lot of sort of unpredictability to the market. And so my honest recommendation to you is to keep it when the stock market is open. Can you trade futures and Forex 23 hours a day, 5 days a week? Can you trade it when the stock market is not open? Of course you can. My argument here is not that you cannot trade the market when the futures when the stocks are not open, but the overnight session can be very tricky, and there's some very key issues with trading the overnight session. Number 1, guys, you're trading the overnight session. The market is just not moving that much typically. It's not going to start moving until the early morning hours of the next day. And so let's say that you're not living in the United States, you're living somewhere in a different part of the world. Hey, maybe extend that out to about 2 hours in the pre-market. So instead of 8:30 in the morning Chicago time, 6:30 in the morning Chicago time, you can trade the pre-market, but you really should focus on when the market is moving. And so I do not recommend trading the overnight session, just to be perfectly honest with you. There are some things that like to move in the overnight session. So the Japanese yen, some of the different currencies. So the Australian dollar, New Zealand dollar, the yen, British pound likes to move a little bit during the London session. You can trade the micro ES futures or the NASDAQ futures during the London session. I'm not saying that that's a terrible idea, but in my opinion, if you are in the United States, Canada, or Mexico, in other words, if you can reasonably trade the futures markets when the stock market is open, that's the best time to trade, is when the United States stock market, the New York Stock Exchange, is actually trading. And if you want to extend that out so you want more time to trade 1 hour to 2 hours in the pre-market. But guys, overall, the overnight session does not move enough. It does not fluctuate enough, and it can have, in my opinion, too little liquidity. I don't think it's the right time to trade. You should wait until the stocks are open, or maximum 2 hours before the stocks open. And so that's my second rule for responsible day trading, is sticking to the regular trading hour session, or maybe 2 hours before that. The third rule of responsible day trading is as follows, guys. You need 3 types of stops. The first type of stop is an initial stop. So if you're here on TradeStation, you're on TradingView, whatever charting software package that you're using, there are 3 stops that you need. Number 1, you need an initial stop. You need to know what your initial risk is. Okay, put that stop in the market. When the market moves against you, try not to move that stop loss. Let yourself actually be stopped out. If you're using proper position sizing, in other words, you're not over leveraging your account, you're not dollar cost averaging, overall, guys, it should not be that much of a pain point to take that initial stop. Okay, especially if you're using kind of tight stop losses. The second kind of stop that you need for responsible day trading are break-even stops. So as the market moves back in your favor, put that stop in 1 to 2 ticks in profit, or right at break even, and that way you are protecting your unrealized gains. Okay, so you're protecting your money, you're protecting your account. The number one thing in day trading is not to make money, it's to protect the money that you have, which I know that sounds slow, it sounds boring, but take it from someone who has done it all the wrong ways. At some point, you have to do it the right way, guys. At some point, you just got to make the decision, and you just have to start doing it the right way. And if you can't trade on your computer because you're working, maybe you need to get a new job. I don't know what to say. I mean, you need to trade the market when you can pay attention to it. And if you're working for that day, maybe get a tablet, get a laptop, or if you're trading on your phone, just make sure that you're only doing it for limited periods of time when you can actually pay attention to it, although I don't recommend doing that. The third type of stop, guys, is the trailing stop. So as your position goes into profit, you need to trail the stop up. Guys, these markets can fluctuate a lot. They can fluctuate quickly. You can always get back in the market and pay the commission. It's way better to pay a commission, so you're getting in and out of trades. It's way better to pay the commissions than it is to have a position that's way in profit and you have unrealized gains that you're not really protecting, and then the market comes all the way back against you. Take it from someone who's had that happen to him many times. Many, many, many times. Trail the stop as it goes in profit. So you start with your initial stop, all right? As the market moves in your favor, if it does move in your favor, break-even stops, guys. Break-even stops. And then when the market goes in your favor, you're trailing the stop loss up 1 point, 2 point, whatever your trailing threshold is, but you are trailing the stop as it's moving in your favor. Number 4, I do not recommend dollar cost averaging. Now, there are many of you that are going to disagree with this point, but in terms of investing, I think it's fine. In terms of day trading, I don't. The number one way that I have lost a lot of money, sometimes in very short periods of time, the number one way that I have lost money trading is by adding on to losers. Guys, it's a very tempting thing to do, but believe me, oftentimes with these markets, when they're moving against you, they're just going to keep moving against you, and it doesn't take that long, and it's not that hard to take a really big loss that you really should not have taken. So guys, in my opinion, my layman, again, guys, I'm a lawyer, I'm not a day trader professionally, but in my non-professional opinion, do not dollar cost average. So what that looks like, guys, is it looks like you've got your one contract on that you can afford, and you're taking an initial stop, break-even stop, trailing stop. You might be in and out of trades. You might only trade for an hour a day. Okay, but the point being is that you're protecting your capital and waiting for the next trading day in which you can actually pay some attention to the market. Okay, number 5, guys, you need to be adequately capitalized. So this is a good reason to trade the micros if you're trading your own cash. If you really have no money, you can do the prop firm accounts. But in my, what I'm doing now, guys, is I'm just trading my own cash. The micros are not terribly expensive, and the day trading rates are not terribly expensive. If you've got $150, you can trade for most discount brokerages. If you're in the United States, for most discount brokerages, you can trade a micro ES contract for about $150. And I think the micro NASDAQ on TradingView is like $400. Not terribly large sums of money where you can trade a micro contract. Guys, that's what the micros are there for. So in my opinion, in order to be adequately capitalized, maybe between $1,000 and $2,000 and you're trading the micros. You can also trade prop firm accounts, affiliate links in the description box below. Okay, guys, so now in this portion of the video, I just want to recap the 5 rules for responsible trading. Number 1, always trade on your desktop or laptop computer. Whenever you can, avoid trading on your cellular device or on a tablet. Trade on a laptop or a desktop where you have enough screen space, drawing tools, indicators, and you can move. So for example, you're trading here using the depth of market. You can move it up and down as you need. I would not recommend trading on your phone, although of course you can read about stock market and economic news on your phone. I do not recommend trading on your phone. Number 2, only trade the day session, or again, maybe 2 hours before the stock market opens. Guys, you really should not, in my opinion, be trading the overnight session. The market's not moving enough. The ranges are too small, and I don't believe, in my opinion, that there's just enough liquidity in the market. And it is from my personal experience that going to sleep while you have a trade on could lead to you waking up in a bad position. I don't recommend going to sleep with trades. I don't recommend trading distracted. You really need to be sitting down and thinking about it in terms of, I'm going to trade for an hour. And if I make some money in an hour or 2 hours, then I make some money. If I lose some money, I lose some money. But I would trade in bursts, and I would trade on your computer during the regular trading hour session. I don't personally believe that you should be trading in the overnight session if you're trying to do this properly and professionally. Okay, guys, item number 3 is you need to know your stop. So whenever you take a trade, you start with an initial stop, and then as the market moves against you, you just allow the trade to be stopped out. Now, if the market moves in your favor, you're moving that stop up to break even, and then as the market goes further in your favor, you need to be trailing the stop up to protect your unrealized gains. Now, there are ways that you can do that automatically. In my opinion, just doing it manually is fine. You don't need to trail the stop up too tight, but you need to trail it where you're protecting some of your unrealized gains. Again, my opinion. Number 5, you need to trade with sufficient capital. Trade the micros. If you don't have $10,000, $20,000 lying around, which many of you don't, and neither do I, you need to trade the micros, or you need to trade a prop firm account. But on either event, you need to trade adequately capitalized. Okay. Overall, guys, when you follow these 5 rules of professional day trading, it's going to take trading from a game and from, it's always going to be a game. It's going to take trading from a game and gambling to a much more of a professional atmosphere when you follow these 5 rules and you actually follow them. You're going to find that you're doing things much cleaner, much more professionally. Guys, just some basic advice that you should be aware of. Number 1, avoid trading on your phone, if at all possible. Number 2, don't trade while distracted. If at all possible, trade while you can pay most if not all of your attention to it. Number 3, trade during the pre-market and then during the regular trading hour session, I would, for the most part, I would just avoid the overnight session. Number 4, guys, don't scale into your losers. Don't add on to losers. Don't dollar cost average in day trading. This is not investing. This is not an investment scenario. Although there are plenty of traders who do dollar cost average and scale into trades and do fine, in my personal opinion, in order to manage your risk, I wouldn't do it. Number 5, you need to trade with sufficient capital. Don't go to sleep when you have a trade on. All right, that's a very basic thing. Don't go to sleep when you have a trade on. Don't go to sleep for the night and you've got a big position on. You're not going to sleep well. All right. So, guys, in this video, I covered 5 more rules for responsible day trading. This is Our Trades back here with another video. I want to thank you for joining me. We'll be back here with more analysis videos. And when I have the opportunity, guys, again, I'm a lawyer. My main profession is, in fact, the practice of law, not trading. And so, you know, when I have the opportunity to live stream, I will live stream. And hopefully I can do that in the near future, guys. I want to thank you for joining me. This is Our Trades back here with another video. Please make sure to like, comment, subscribe, and use the affiliate links in the description box below.